Next up, we have one of the most well-known investors. I'm sure you guys all know him and love him. Matt Hawkins of Entourage Effect Capital is going to have an awesome conversation with Michael Schwamm from Duane Morris. Got to be one of your leading attorneys. Gentlemen, let's get on up here. Give him a warm welcome from Matt Hawkins and Michael Schwamm.
Me over here? Are you?
Good here. It's good.
All right, perfect.
Well, welcome everybody. Looking forward to having a great chat with Matt. It's so nice to see you in person and not having someone say you're on mute.
Yeah, it's good to be here in person. Good to see everybody. A lot of friendly faces I haven't seen in a while. It's great to be in person.
Yeah, I think for a lot of us, the first conference in person, certainly, I think that's the theme given the attendance here. So given we only have 20 minutes, and we've done this before in an hour, let's get right into it. So I guess everybody always wants to know, how did you get into the industry in the first place? We all have our own journeys. I came in, representing investors who were curious about the space. You obviously did things before. What was the aha moment for you? And
Yeah, it was a long journey. I mean, I've been in private equity for a long, long time, and I just happened to get out of through an exit in 2014. Started seeing some private lending opportunities in Denver, Colorado, through real estate, and really just made the determination that the yields would likely dry up on the real estate lending. But if I could figure out how to underwrite the cannabis companies that were leasing these industrial properties, that I could maybe have a first mover advantage in equity investing in cannabis. And so that's what we did, and that was my luck and timing moment.
And what year was that?
That was 14, and we raised our first fund from 14 to 16, and it was part of a rising tide. It was a great success. It was a lot of fun. It's a lot easier back then.
Yeah. Well, a whole lot less competition, right? Although the company,
there's not much competition on the funding side, but it's just the industry's matured and evolved so much since then. Back then, it was really a rising tide.
Yeah. So let's you're now investing out of Fund 3. Take us through the strategy and the size of the funds.
Sure.
I think it's it tends to track the how the industry is matured.
Yeah, I mean, there's no doubt about it. We've matured along with the industry in terms of the stage of investing that we're providing. Fund 1 was angel investing. $500,000 checks could move the needle for these startup companies, and Fund 2 was more Series A investing, because that's where the industry had moved towards, 3 to 5 million check sizes over the life of the investment. Fund 3 is different. I mean, we're now providing growth equity to build scale in advance of what we think will be some type of legalization event during our hold period in Fund 3, and it's also commensurate with the size of the funds. We've gone from a 20-ish million with co-invest in 1 to 75 with co-invest in 2, and now we're almost about close to halfway through our raise of 150 in Fund 3.
And has your strategy in terms of what subsector of the market changed, or I mean, are you still
Yeah, I would say we've always been trying to provide our investors a very diversified approach, touching as many verticals as we can. And in Fund 3, it's very interesting because, as I mentioned, the scale building, when institutional capital comes into this, and big pharma and tobacco and alcohol, CPG, they're going to want to have, they want to touch every part of the industry. So there's, you name it, 10, 15, 20 different subsectors that we want to look at and build scale in, as many as we can. That means finding the leaders in each category, putting deals together like we've done already. And because we're lucky that we've been around long enough, when we know all the key players, it's a hell of a lot easier to find deals now than it ever has been.
Yeah. And I mean, you finding, as you're in raising money, still raising money for Fund 3, that the investor profile has changed? Is it expanding, or is it existing investors, re-upping?
It's both. But the profile hasn't changed because there's no institutional capital. I mean, I would love nothing more than to be able to go out and get half my fund committed by a large institution. But if I had that luxury, then there'd be more capital competing. So it's a hard, it's a hard row to hoe. But there's more family offices entering the game. There's a lot more RIAs and wealth managers that are, that are recommending their clients. But of course, they're all independent that aren't big bank related. But there's definitely a lot more interest, but it's the same underlying profile of the investor.
And one of the things I've always been curious about is, is it getting harder to continue to raise money from the existing cannabis investors? Because frankly, most of the the consolidation has happened have been stock deals, and so there's hasn't been a lot of cash going back, and so it gets difficult to keep them going back to the same well.
There's no doubt about it, and luckily for us, our first fund produced very, very good returns. And so, typically there's a, plus we're still in the hold period of fund 2, but it looks like it's going to perform very, very nicely. But to your point, I mean, most of the retail investors that have been playing the stock market as their cannabis investment tool have gotten their ass handed to them. Yeah. And it's hard to raise money from that. And so it's that's a tricky thing, and we got to keep finding the right guys to that might fit the profile.
Yeah. Well, I'm waiting for a fund 2 distribution so I can roll into fund 3.
Right. Right.
So speaking of fund 3, you guys have been in the press a lot recently with the Harborside acquisitions, the consolidation, the eventual rebranding. I'm sure people sort of want to know how was that always part of the strategy of Fund 3 was to do acquisitions?
Well, it actually has nothing to do with Fund 3. So I'll just tell you the story of how we got involved with Harborside. It actually goes back to Fund 1 pre-2016. So this was still when California was just a medical only state. We had invested in the farm up in Salinas, which was just not even a subsidiary of Harborside, just just kind of the cultivation arm that had a warm relationship. And it was also because of the laws wouldn't allow that. When legalization occurred in 2016, we negotiated with Harborside to become one. And there was we were able to get a pretty nice valuation for the farm. And that's when I joined the board. And that's when we started raising the Series A. And that's when we started listing on the CSE. And then what happened was over the course of, the better part of 2.5 years, we as a firm grew frustrated that we weren't moving commercially fast enough. And so that's when we led the dissenting shareholder movement in the fall of 2020. And we were prepared to go through a proxy fight. So it was a big deal, but we were able to prevail, and we took over the board, and we set out on a mission to make Harborside the preeminent single state operator in the state of California. And with these acquisitions of Sublime, Urban Leaf, and now Loudpack, we feel like not only have we done that because we've increased, the run rate from a revenue standpoint to close to $200 million annualized. We're also 100% vertically integrated from cultivation to manufacturing, production, branded products, retail, distribution. And so very few people in California can say that. And the only way to compete right now in California is to be vertically integrated and have that kind of scale because it's so incredibly difficult given the climate there. And we feel like this is the best chance to provide shareholder return by saying, look, we've built a company that has this much scale. It's going to take a while for the market to recognize that. But in advance of that, now we're just doing the hard work, which is integrating. We've got Ed Schmaltz, who's a seasoned operator, and he comes from a pedigree of Goldman. He was the COO at Patagonia, the CEO at FAO Schwartz. So good team in place. We're really excited about it.
And is the you have all the pieces in place? Are you looking to continue to grow
Yeah, good
through
question.
acquisition or organically now?
We have all the pieces in place to capitalize on further retail and brands, but we want to get to a point to where, you know, all the products flowing through our system and have a few select, you know, third-party brands that are on the shelves. But the reality is that we want to go out and find, you know, more attractive assets from a retail standpoint in California and plug those in, and just continue to, you know, for the beast to feed it, so to speak, with all the cultivation prowess we have up in Salinas.
And are there plans to become an MSO, or are you content being in the fourth largest economy in the world?
Yeah, I mean, it's a, you know, yeah, I mean, that's a good point. I mean, what is it? Arguably an $8 billion market in California. So, and that's before, again, arguably half of the market hasn't even been converted yet. So, feel pretty good about being a single state operator. And we also know that, you know, most MSOs haven't touched California yet, and they're looking for somebody, you know, in some company to figure it out. And so we feel like we're in a good position to be able to do that. And then if an MSO comes knocking and, you know, price is right, we'll see what happens.
So, you know, stepping away from Harborside as you look to continue to deploy capital at a Fund 3, what's your, you know, do you have views on, you know, limited license states, particularly the Northeast versus, you know, and in other places, you know, Oklahoma?
Yeah, well, we've definitely moved east. I mean, we're now focused on a lot of plays in the Midwest, the Northeast, Mid-Atlantic, even the Southeast. And it's not just operation. We're talking about, I mean, while we do have 2 single state operators in the portfolio, Organic Remedies and Curio Wellness, both that are dominant in their states and are starting to expand to others. We're also looking to partner with good operators in the Southeast. We've got a strong relationship with a group there called Good Day Farms. And, you know, I see some friendly faces from Good Day sitting right in front of us. And, but we're also working with, you know, ancillary companies that are looking to expand too. One of our investments thus far in Fund 3 was Hound Labs, which is you know, one of the first, in fact, the only breathalyzer on the market for that'll test THC, you know, at that particular moment in your body. And look, I mean, and testing for impairment is going to become an issue as we get closer to regulatory reform. So, really trying to be, again, very diversified, but building scale in as many verticals as possible.
But you know, so you know, since I am based out of New York, and it's become near and dear to my heart as they begin to, you know, roll out, you know, the industry there. Do you see, you know, opportunities and interest from bigger players where you know, they're going to be limited to, you know, one license category, which means, you know, X hundred square feet of cultivation or 3 dispensaries, or do you think it's going to be primarily a sort of a mom and pop, you know, industry until, you know, they allow consolidation? I mean, would you invest into someone who has three licenses?
Yeah, I mean, look, I mean, the reality is there's got to be a play for us to where there's something else other than just, you know, a mom and pop. And I think the unfortunate reality is that whether it's set up that way initially or not, it's going to morph into that because there's just not enough capital and not enough critical mass for that to expand into, you know, the businesses that the industry, quite frankly, is becoming today. And I think ultimately New York and New Jersey will be no different.
Yeah, and you know, I mean, ultimately, if the goal here is to create generational wealth, then if you don't let this industry consolidate, I mean, that'll never happen. No one, right? To have 3 licenses, you know, it's a business, but it's not a, you know.
I think yes, and I think a lot of the applicants you're seeing now, you know, and granted, there's you know, the need for social equity applicants, and there's a different profile across the board for the types of applicants you're seeing. But, you know, setting applicants aside for a second, I mean, just look at the talent that's entering the space now. I mean, Ed Schmaltz is a perfect example. I mean, the pedigrees of some of these CEOs that are now in the industry, you know, they're not going to want to run a mom and pop shop.
Right. Yeah.
And so there's got to be, you know, if we're going to keep and retain talent, you know, at the highest level in the industry, then you got to have the, you know, the top tier, larger scale companies for them to be attracted to.
Yep, no, I can't agree. And you're definitely seeing, folks from other industries getting very intrigued and, wanting to move across, but they're not going to necessarily leave, this CEO job of Procter & Gamble to come to a 2-store dispensary.
Yep.
So I've always been a big believer that you learn more from your mistakes than your successes. You guys have been incredibly successful, but I'm guessing, there's probably 1 or 2 things that you've done along the way in the cannabis space. Yeah. Yeah. Well, you're a smart guy. That you have, not necessarily that you would have done differently, but that you've learned from, and, for all the, potential investors out there, what trips are there for the upper area?
Obviously, Fund 2 in particular, we've just experienced so many ups and downs in the markets from, 17 until now that, inevitably you're going to have, all kinds of issues from capitalization needs to, management issues. And I would say that, in the peak, before the first kind of, tidal wave that came crashing down. We were real aggressive, and I'm not sure we ever cut corners, but one thing I will say that in a couple of deals that we did was we may have said, okay, this management team doesn't look fantastic, but gosh, we love this company, and gosh, we love this product, and shame on us, because then we had to spend an exorbitant amount of time to replace management, roll up our sleeves, get involved. Luckily we've been able to save all the companies that we thought were in dire straits, but it took a lot of hard work. And in hindsight, we may or may not have made that investment as a result. And so I think the learning that we take now as a firm is no shortcuts. Management team has to be spectacular, because at the end of the day, we are backing management, and we want to support the top tier management in the space to give them the capital they need to execute on their business plan. If we come in and have to take over, then something went wrong. That's not our model. And we're equipped to do it now, thank God. But, we had some serious pains back when we were doing that. But we've also learned a lot. And as a result, we're not scared to go into turnaround situations if we have to bring an operator with us, and that's why we were not scared to take on the Harborside opportunity, because we had learned some things that we knew now we could do as a team, and had the ability with our investor base, the ability with our network to take advantage of some what we thought were some really good opportunities.
So I know when you were back when you were thinking about your Fund 3 strategy, whenever that was, there was some talk about, doing that as a distress fund or setting up a SEP. Do you still think that this industry is heading for some stress?
I don't. I think that was, prior to COVID. Look, COVID, during the time and immediately after was a huge boom to the industry. I think now it's we're now competing against those years where it was so great, and that's a little bit tricky. And now we're kind of normalized, but I think at its core, the industry is in really good shape. It's obvious the main thing the industry needs is capital. And we as a firm take great pride in the fact that we're one of the few that's providing that capital right now, in advance of institutional capital and all the big industries coming in. But because of that, there are huge opportunities, so I say, to take it from here to here in advance of that happening. Whereas in our minds, prior to COVID, when we were formalizing our strategy, we didn't think there were going to be many companies that were even going to get to here.
Right.
And thankfully they have, and we see, and I'd rather be investing out of a growth equity fund versus a distress fund. It's a hell of a lot.
Yeah.
It's a lot. We could make it work, but it'd be a lot more effort.
And it does look like, we are seeing the first wave of large consolidation in the industry, which, should hopefully, entice more investors to come in.
I think so.
And right there.
The other thing is that I'm seeing out there when I talk to new investors is that, 1 out of 10 people that tell me they have an interest in the space come back and say, I just can't get over this, morally or ethically. So I think the stigma has, for all intents and purposes has been removed. But you're still going to hear it from time to time, but nowhere near as much as we did, 2, 3, 4 years ago.
Yeah, I think that's the stigma is certainly, is gone. So I think we have time for one question if there is one. I can't see any hands. Are any hands up? No.
All right.
I guess you answer that. I guess for the portfolio company wannabes out there, what's the best way to approach you? How far in advance do you like to get to know management before you invest? Is there sort of some type of commonality among that?
Yeah, I've said this before. It's like anybody that comes and cold and tries to connect with me through LinkedIn and send me a deck that way, it doesn't. We just can't do that. I mean, it doesn't. But when I see somebody that has done the effort to, figure out a very warm connection to us, it's not that hard. That's what LinkedIn's for. You can figure out who you know and make connections that way and do the legwork first versus just crazy cold calling and crazy why isn't this guy getting back to me? I mean, we're busy as hell. I hate to be rude, but if you can make that connection, you're going to get a reply.
Right. And in this industry, everybody's one step removed from you anyway, right? If you don't know somebody who knows Matt, then you're probably not serious in the industry because he frankly knows everybody.
All right.
Well,
whatever.
I think we're out of time, Matt. It was a pleasure.
Well, thank you, Michael. Appreciate it. It's good to see you again. It's good to see everybody.
Yeah.
Thank you.